What's going on, YouTube family? Today we're going to be talking about how banks get you approved for auto loans. Now, the reason why I'm doing this video is because I had such a massive feedback from our last video talking about how banks actually love lending to immigrants, especially the Latino community, because of how they charge higher interests and how they're more likely to pay their bills than the average American. So after doing a lot of truth bombs in there, I figured I'd give you the rest of the spread of how banks actually work, how do they rate you, and how they can actually judge you in certain ways you had no idea was even possible. So I'm hoping this video will clear some of the air because a lot of the things we're going to cover are going to show the massive discrepancies on where you actually buy your car, how different states actually approve you, and where you actually live can go against you when it comes to buying a car. Now, I'm sure you guys have heard stories of like, hey, I tried to get a car in my own backyard and whatever, let's say the state of California, they said no, but then you go to Texas and for some reason, every bank wants to lend you money. Why is that? It's because I'm going to give you all three reasons on how banks rate you. It's going to be by the person, the individual. It's going to be represented by Batman, the vehicle itself, which is the actual G-Wagon here, and of course, at the end of the day, the dollar, because this is what's going to make the deal happen. So let's go ahead and start off with the individual. Now, this is the very first step of getting your auto loan approved. We're going to look at you. Now, obviously, we're going to look at your credit, but not all credit is the same. The biggest misconception is people thinking if they have a high credit score, for some reason, somehow, they're going to get approved with zero down and super low interest. That worked back in the day when there was a lot of auto approvals. They basically just set it at anything above 710, you would get automatically approved for a low rate. Well, now they want to actually see what type of credit worthiness do you have. Is your trade lines your own? Are they authorized users? Do you have credit cards over $10,000? Or all your credit cards like $500 store cards? Do you have multiple auto loans paid in the past? Are you current on your thing? Do you have any tax liens, any bankruptcies, any child support? All these things are really factoring in because for the last few years, banks have been hit with massive amounts of fraud. So they are going to double check and triple check everything just to make sure that you are a qualified individual when it comes to credit. Now, after you get through that scrutiny and you're figuring, okay, I got a good credit, I got a good base, let's go to the next thing, which is proof of income. Now, this is another thing that was really bad with fraud. People would make fake pay stubs, fake W-2s, bring fake bank statements. All that stuff used to pass a few years ago. It does not anymore. We have things like LexisNexis, Plaid, that will actually connect to your bank account and let me know exactly how much money came in and out in the last 365 days. So I can tell flat out who the biggest bills are, where your money's going, and how you're making your money. So if this does not match up with your pay stubs or your W-2s or your fake bank statements that you brought in, you are automatically going to be terminated. On top of that, they're going to look to say if you worked at Bob's Pizzeria, but on your credit report, it says, Jose's Taco Stand, they're going to be like, hey, why are you working at two different restaurants when you said you've been at this one for a year? They're going to want to know why. They're going to ask that question. Now, some of the banks will go ahead and rewrite your deal, but some banks will automatically deny you because they think you're lying. So you have to be really firm on what you're doing. Be just honest. If you just started a new job, put it on there. There's nothing wrong with that, but they want to see some sort of stability. Also, some banks now are requiring 6 to 8 months on the job before they approve you for anything over $35,000. Now, the next is proof of residence. This is a really big one because once again, because of the pandemic, everybody moving around, all the crazy fraud, they want to make sure that you live in the residence. So they're going to run it through LexisNexis and see if any of your power bills are in your name. And if they are, great, you shouldn't have any issues. But if they're not, they're going to ask you for copies, and now they're starting to verify. There's a lot of companies that have third-party websites where we can call and say, hey, does this guy have power with NV Energy? And I can give me your account number. And if the account number doesn't ring through and it doesn't match the last name, we know that you're pretty much full of shit and you're lying and you're just trying to push through the loan. So everything we're doing now is really get tuned down to getting you approved. Now, once they get all that stuff together, proof of income, proof of residence, they make sure you're not bad and they talk to all the other banks, seeing that you don't have any other pending deals because you have multiple, let's say, hits on your credit because you've been running around every dealership trying to get approved. Once they look at all that, they're going to give you what's called a rating. And let's just for sake, every bank has a different rating system, but let's say it's 1 through 10. They're going to give you a risk rating. Oh, so another thing that gets involved with your risk rating is where you live. Now, not only will it tell us like where you live, but it'll tell us the type of demographic that you are. This is how banks basically can cut out people without being racist. So if you live in a predominantly Hispanic, Black, Asian community, or white community, they know it. And so everything has a demographic rating to it. It sounds funny, but this is how they can judge people, because legally they can't do it by race, but they can do it by zip code. So if you live in the ghetto, they know it. And so they're going to look at all the other people in that area that are paying. And if they're not all paying, they know that you're probably not going to be a good paying customer. So if you're thinking about getting a car and you live in a bad area, try to use your grandma's zip code and maybe move some of your bills over there and hopefully pass that test. But this is where a lot of people always say, well, it's illegal to judge somebody on race and to do this, but they don't have to. They just have to look at where you live in certain areas that you do. All the actual data they have is so in tune, they can tell you exactly a probability of what your nationality is, how likely you are to pay your loan, and what kind of customer you're going to be. That's how much money these banks spend on gathering data. So they don't need to know if you're black or white or whatever else. They can literally tell from what you do for a job, where you live at, and how you basically your spending habits are, and they can tell you exactly what you are and how much you're going to spend and how good you're going to be at paying your loan. Now, the next thing we're going to talk about is your actual vehicle. Now, this is also going to get a risk rating, and this is where a lot of people get screwed up at. Everybody thinks that because you have good credit, for some reason you get whatever car you want. Well, this score will actually outscore your personal risk rating. So if you have, let's say, okay credit, you're a first-time buyer, but you're a good person, if you try to go get a Mercedes as your very first car, they're automatically going to whack you with higher interest, a bigger down payment, or they're just going to flat out deny you. So I always tell people you need to buy what you're qualified for. If you are a first-time buyer, get an economy car, something that's cheap and affordable, hopefully something under $25,000. Once you build a little bit more established credit and you have like a $30,000 loan, you could bump up to a $40,000 loan. After that, maybe a $50,000 or $60,000 loan. For some reason, everybody during the pandemic, they were giving out all this money. They wanted to jump from driving a beat up Honda Civic to a Bentley. And it just doesn't work that way. And it's nice to see that banks are going back to that. So when it comes to the risk emblem of your car, they want to see what you do for a living, how much money you make, and then they're going to tie that in with the vehicle. So like I said, affordable American, Japanese, or Korean cars are going to be the easiest and they have the lowest risk because the insurance is a lot less, the maintenance is a lot less, and you're more likely to pay for that car. Also, when it comes to luxury vehicles, we all love G-Wagons, we all love Audis, Mercedes, Cadillacs, all those other things. But one of the fastest fall-offs when it comes to depreciation is luxury cars. So if you bought this car for $80,000, you drive it for a year, and now it's worth $65,000, if you're a high net worth individual, you could take a $20,000 hit and it won't crush you. Where if you're a paycheck to paycheck type of guy working at Domino's Pizza, it's going to absolutely crush you. You're never going to be able to get out from this loan. You're going to have 5 years, you're going to be buried underneath it, and you'll never be able to get out of it. And that's what banks don't want to do. Now, traditionally, they didn't care. They would bury you under these cars. I'm sure you guys have seen tons of stories where people would come in, owe $20,000, $30,000 more than what the car is worth, and they would just roll it onto the next car. Well, those days are over. Unless you have an 800 credit score and immaculate auto rating, they're going to flat out turn you down. They don't want to add more debt to bad debt. What I've seen a lot lately are people that are basically trying to trade in their overpriced inflated cars or upside down in to buy a new car. The dealer's telling them no. They buy the new car and then they give this other one back to the bank because they don't want to make the payments because they owe $20,000, $30,000 more than what it's actually worth. So the auto rating is getting very critical on you getting approved for a vehicle. So do not believe the hype. I hate it when people are like, as long as you have an 800 credit score, you can get whatever. And this is something else that's pretty funny that I know bankers won't tell you, and it's not written anywhere else. They will judge you just like how they judge you off of race, nationality, and where you live on your vehicle. Perfect example, Chargers. I have so many subprime banks that will not touch Dodge Chargers for the life of them because they know it's going to be an instant repo, it's going to be beat up, it's going to smell like weed, it's going to be trashed out. And it sounds funny, but when you come to the auction, you see the repo yards, they're all beat up, they're all destroyed. It's just the people that buy those cars just absolutely destroy them. Same thing like with Jeep Wranglers. They tend to basically work really well on resale markets, but some subprime lenders don't because they're worried about people going out, doing four-wheeling and rolling these things over. Another one is the older Hyundai and Kias, the ones that have the key problems. They know that they're more likely to be stolen than anything else, so they don't want to mess with them. And this one's pretty funny. This one's for my Latinos out there. Any older Chevy truck, because you could steal it with the popsicle stick. They do not like to lend on them, even though that's the number one truck that Latino buyers want. And most times they'll give 130 to 145% of LTV, which is loan to value. They'll give you all the money, but they're so worried about people stealing them because, like I said, you can literally steal an old Chevy stick with a popsicle stick. I'll show you one day in a video. It's hilarious. But, these are some of the things that, like I said, they're not going to be in bank books. The bank's not going to tell you. They're just going to give this car a very low rating for approval unless you basically counterbalance this out. If you live in a nice neighborhood, you make good money, you have great auto history, all these other things, the banks, like I said, they don't want to judge you on your person, but they can tell overall and paint a picture of who you are, where you are, and what you're going to be doing with the vehicle. Now, the last thing, of course, is always the money. And this is one that everybody screws up. Once again, if you have good credit, everybody thinks that if you have great credit, you don't have to put any money down. You can get whatever vehicle you want. Not true. I've seen so many people get denied for really nice luxury cars, exotic cars, because they had a 600 to 800 credit score, thinking that they were the man and they paid all their bills. It doesn't work that way. They're looking more at history than anything. It's credit worthiness. How much do you actually have deployed? Now, one of the things I was always proud of is the fact that I started with a $50,000 car and worked myself up to a $250,000 car. So I was able to buy an exotic car of my dreams and have all that cool stuff. And I was pretty much the only person I knew that had something like that. Today, it's a complete opposite. During the pandemic, any clown that made $20 an hour could buy a Lamborghini Urus. They were literally giving these things away to everybody that couldn't afford them. I used my friend as an example, had a $30,000 Honda Accord loan, and then they gave him a Lamborghini Urus for $230-something thousand. People buying Ferraris, R8s, Porsches, Maseratis, like they're just giving out crazy loans to people that didn't earn them or couldn't pay them. Well, now that the banks are basically seeing what they basically had and the exotic market is starting to fall apart because people are broke, they can't afford these things, it's starting to come back. So they want to make sure that you have credit worthiness, that you built up that type of rapport. So if you're going to get an auto loan, make sure that if you do a $10,000 loan, your next loan will be maybe a $15,000 to $20,000 loan. And just do it like in either increments of anywhere $10,000 to $20,000 more than what you're doing. And little by little, you can build yourself up. Because I believe this is the real way to go, because if you don't, you're going to get yourself in trouble, get into a lot of debt, and you don't want that. Now, when it comes to money, putting money down, always put 10 to 20% down when it comes to a car. Because if you put 10%, let's say you're buying a $100,000 car, that's pretty much canceled out just by sales tax. If you're buying a regular car and you're putting 10 grand down, it will look better to the banks. The higher down payment there, the less likely you are to actually do this. This is another risk score. They judge it by the deal. So they'll call the dealer, somebody like myself, and be like, hey, this guy with a risk of 10 wants to buy this car with a risk of 10. What are we going to do to offset these two risks? Oh, well, the customer's got $25,000 down. He's been on his job for a year. He's a good dude. Bank's going to look at me and say, okay, if you get this much money down, we're only going to charge you $500 to do the deal and just make sure everything works out. Now, if let's say you only have $10,000, the bank's going to tell me, you know what, Lucky, we don't really like this deal. We don't trust the customer. We don't like the car. We're going to charge you $5,000 for the deal. So even though let's say this loan's for $100,000, they're going to give me a check for 95 grand. You're still going to pay the $100,000, but the 5 grand is going to come out of my pocket because the bank doesn't want to risk it. And then on top of that, depending on how bad you are or how bad your credit is, let's talk about some people with bad credit. If they're worried that, hey, this guy's got a repo that's a year old, we don't trust him, we want a 3-month recourse, which means that if you default on any of your first 3 payments, I have to give the bank all the money back and chase you to get the car back. This is a real thing. And this is another reason why dealerships are going out of business, because people are dipping out with the cars and keeping the money, and it's just a bad scenario. But this is where it comes risk on your side. So when people are like, why does the dealer keep asking me for more money down? Why does he keep changing the deal? It's because nobody wants to buy your deal. There's something that's hanging it up, either because of your bad personal score, maybe the risk score on your car, or the risk score on the deal itself. They don't feel like they're in a comfortable position with the car. Now, when the money's flowing and the economy is good, you can see the risk scale move quite a bit. During the pandemic, money was flowing. Everybody and their grandma was getting crazy auto loans. Now that people are not paying, record high defaults, and basically the money sucked out of the economy, you're starting to see that credit news start to tighten. On top of that, one of the other things I'll tell you about working the deals with banks is every bank has what's called a lending wheel or a lending chart. They have this little parameter of cars like, hey, from 2010 to 2025, cars with, 0 miles to maybe up to 30,000 miles. Some banks will do up to 100,000 miles. Other companies will like, hey, this bank likes Japanese cars. This bank likes German cars. Every bank has their favorite type of paper and every type of person, every type of auto loan, and every type of deal. And so this is where the dealership, if they're good, they can guide you in the situation to put you in the best scenario. Because if you come into my lot, hey, Lucky, I got a 700 credit score, I got 2 paid auto loans, but my highest loan is 20 grand, but I want to buy this $100,000 G-Wagon. Well, guess what? I'm going to tell you, man, you better bring 25 grand at least, so this way we can make this deal happen. Because most of these guys won't do this. They'll get you excited about the car, they'll stuff you in the car, they'll send you home, and then 2 weeks later, hey, remember how you only put $5,000 down? Yeah, we need another $15,000, we're going to have to take the car back. And you've already showed your friends, you've already showed your family, you put it all over social media, and now you're going to look like a clown unless you come up with $10,000 or $15,000 to basically pay the offset. And that's what dealerships do. But good dealerships with actual competent finance departments will tell you, if you have this type of credit, don't look at this car, look at something else. So if you've ever wondered why somebody will give you an $80,000 approval on, let's say, a Tahoe, but they won't give you a $35,000 loan on a used Mercedes or Cadillac, that's probably why. Is because the risk of the car is not worth it. The banks don't want to do it. They'd rather take a bigger risk on a more expensive car that's maybe American or something with less maintenance. And so that's kind of the balancing act that you have to do. Now that we've gone over all that, this is just the first step to get you approved for the car, because the bank is not done judging you. Once you get the car and somehow it's yours, you're able to get the car, you get your money with the dealership, you leave it with them, and now you got the car of your dreams and you're ready to go. Well, here's the downfall. Every few months, depending on what state you live in, they're either going to do a soft pull on your credit. They're going to do LexisNexis to make sure that you're still at your residence. They're going to do whatever they can to make sure that you're taking care of the vehicle. I did a video a few days ago talking about how Uber and Lyft are actually repoing cars because it's against their policy. And people are asking me, well, how would they know? How would they find out? There's databases literally for everything. You could find this stuff online as well. So every time Uber puts out a list of cars that they have on their platform, or Turo, or whatever the case may be, delivery drivers, all that is accessible. So once they get that and they run it, they're like, hey, look, you said you weren't going to use this G-Wagon for commercial use. You're using it to, I don't know, do Uber or Postmates. They take it away from you. Hey, you know what? You had full coverage insurance on it. We saw you went down to liability. Depending on what state you're in, they could possibly take your car because their collateral is at risk, so they can take it. So that's another reason why you have to do this. So even after the sale, there's a lot you have to worry about. And on top of that, you always want to make sure that you try to be as honest as you can with the bank. If you're moving, let them know you're moving. If you're changing jobs, let them know. Believe it or not, they actually like that. They know that you're honest and you're looking for it. Now, another thing that you're not going to find online or anywhere else, and if you know anybody that works at a bank, they can tell you, they'll have an internal score for customers. So if you're a good customer, you called them, told them, you're moving, you lost your job, you're making payment arrangements, whatever you're doing, you're keeping in contact with them, it works much better for you. And eventually you get on a list where, hey, you know what, this guy was good, maybe he was late a little bit, but he was always honest with us. He's eligible for another loan. Where I've had people that would lie, yell at the customer service people, ignore them when their calls. Guess what? You're put on a list to not be renewed for a new loan. So you can go out, buy a car thinking, oh man, I'm with Wells Fargo, everything's great. And you basically lied to Wells Fargo, didn't return their calls, didn't get insurance on the vehicle. Then you go to a dealership trying to get approved for a car, and then they tell you no. And you're like, oh, well, I'm with Wells Fargo. I paid every month on time. You should go to them. And they're like, yeah, no, sorry, Wells Fargo doesn't want your business. And you were wondering why. I made all my payments. Why would they turn me down? It's because your internal score is bad. So a lot of this stuff, like I said, is not front facing. You're never going to see it, but this is how at the end of days, they're going to judge you. Just like if you had a friend, if your friend wanted to borrow $20 and you had to chase him all the time, but he did give you the $20 back, are you going to give him another $20? Or maybe he asks you for $100 next time? Probably not. But the friend that calls you said, hey, you know what? I know I was going to give it to you Friday. Give me till Monday. I get paid then. If he does that, you're more than likely probably going to give that guy money if he needs it again, maybe even a little bit more, because there's some sort of communication and you feel better about that, risk. And once again, banks are all about offsetting the risk. So if you think about it this way, it will completely change the game. Now, I know there's a lot of people in the comment section going to be like, oh, this is how I trick banks and this is how I do stuff. And I use CPNs and I buy trade lines and I buy through my business credit and all that other stuff. All this stuff applies to this. And when you're trying to defraud the bank, I'm telling you, no matter how smart you think you are, they're way hipper. I've watched them literally set up people with fake IDs, fake socials, told them they got approved. They show up to the dealership and they got raided by the feds. So Please don't do that stuff. It's completely stupid. There's videos all over. I don't know if you saw the guy getting tased at the Kia dealership. They came in with a fake ID, fake social. So I think the guy was dead for like 5 years, but he got his social security, ran a bunch of stuff. And when they brought him in, the cops tasered him right in front of everybody. It was pretty hilarious. But these are some of the things, like I said, you have to worry about. So if you're thinking about getting auto loan, make sure you have all these things covered. And hopefully you guys learned something from this video. Please like and subscribe, and we'll see you next video.